I'm Jen Beeston. Today I want to talk to you about mortgage fraud. So most people don't even know that mortgage fraud is a real thing. They picture it as like some huge, giant criminal Ponzi act, but actually people are trying to commit mortgage fraud like every single day. So today I'm going to cover with you the number one type of mortgage fraud that we see as a lender and how not to become that person who's trying to commit it. So the number one form of mortgage fraud is occupancy. So when we're pricing out a loan, we're pricing a loan based on your occupancy, also your credit score, loan to value, but occupancy is a huge deal. Here's why. If someone is in a bad financial position, the last house they are gonna let go into foreclosure is gonna be their owner-occupied home, meaning the home they live in, okay? So if I'm looking at rates, the rate for an investment property, this is for the same borrower, is going to be higher than owner-occupied. Second home is usually about the same as owner-occupied, but it can have different rules when you get into the jumbo categories and when you're in the conforming categories. So price-wise, owner-occupied and second home are the same. However, they have different rules, okay? So owner-occupied is going to be the lowest rate, investment's going to be the highest rate. So what I hear a lot of is, well, what if I say I'm gonna live there? Okay, so you mean like what if you lie? Well, you'd be lying and you're signing an application that's saying you're not lying, and ultimately you'll sign a loan note saying you're not lying, so it's mortgage fraud. It's that simple. It's mortgage fraud. Whenever you're filling out an application with a lender, you need to be truthful. If you are gonna live there, owner-occupied, great. We can do your occupancy as owner-occupied. If it's gonna be your second home, meaning second home for your exclusive use, not a rental, not a vacation rental, a true second home, meaning your second residence, great, fine. And if it's gonna be an investment property where you make money off of it, fantastic. But if you're trying to claim a different occupancy to get a lower rate, you're just committing mortgage fraud. Now there's a new level to this that we're seeing, and what it is people who are actually gonna live in the house are saying that it's an investment property because we can use rental income to help qualify them for that home. Don't do this either. If a lender's telling you like, oh, you don't qualify to live there, but if I do it as an investment, I can count projected rental income, then you qualify, hang up. Just hang up. Because if you don't qualify without fake criminal money, you don't qualify. So please, okay? And I say please because I have this conversation so much where I'm like, look, I'm not gonna put it down as owner-occupied because you've already told me you're not gonna live there and it's 400 miles from your job. No underwriter is gonna buy that you live there and you're committing fraud. Like, don't do it. So I hope this has been helpful. When you're doing your loan application, make sure you're truthful about your actual occupancy. Thanks for watching.